Hello, warm greetings to you. Thank you for dropping by at our social media. I am Chin An and I would like to share the key proposals from the Retabled Tax Budget 2023, which was actually presented in February 2023 recently. Now, I will go through some of the key highlights that can be more relevant to individuals and SMEs. I'll be sharing from our firm's website, which is at calow.co. So feel free to drop by to read more about these proposals if you just want to have more information. Now let us start with personal tax or taxation for individual. Now this year for budget 2023, we would say that there is nothing much excitement in terms of any new tax relief that the government has introduced. Not much. So let me just share with you some of the key highlights that you would probably need to know. Now the first one is actually the tax rates adjustment. Now this can be a good news to some. It can also be a bad news to some. So basically the good news are those that you are not at a very high income level. In fact, government says that this is aimed to help the middle income group. So we will see that there will be a tax rate adjustment by bringing down up to 2 percentage points for those resident individual that their chargeable income is between 35,000 and 1 ringgit up to 100,000. So assuming if your chargeable income is at 100,000 exactly, you will see that you have a tax saving at 2,300 ringgit. So that will be a good news for some of you. And for those of you who are actually at the higher income band, which is what we like to call them as the T20, you will find that for those that the chargeable income that is above 100,000 up to a million, there will already be an increase in the tax rate that is gradually from 0.5% up to 2 percentage point. So assuming if your income, your chargeable income is about 1 million exactly, you will expect that your tax liability will go up to somewhere close to 11,000. So that's what you will have to pay additionally compared to what you're paying in year of assessment 2022. Now, what is a good important tax planning consideration? This is actually more relevant to people that they are a sole proprietor or they are actually running business via a partnership. You could consider using business vehicle like a company or like a limited liability partnership to take advantage of the new proposed lower tax rate for the MSME category. We call this as the micro, small, medium enterprise. So where their tax rate is first at 15% for the first 150,000 of chargeable income. So this will actually be quite advantageous to help them to save taxes. And not only that, they will also be a way to institutionalize your business structure so that you could have, for example, a corporation. This will expect better improvements in your documentations. You can have your financial statements audited. It will be easier next time for you to do a business loan application. So there are some pros and cons, but what we're saying is there's a point of consideration. And for high income salaried individuals, you could also consider looking at your employment package to see in what way that your tax efficiencies could be improved. Now that's actually about tax rate. Do we have any new relief for year of assessment 2023? There's not much. There's an expansion to the medical expenses for self, spouse and children. Now we know that basically this is a relief that's meant for serious disease, but ever since, because of the COVID pandemic, the government has expanded these to include vaccination, COVID tests, and they also have included, of late, the recent one, in terms of fertility treatment, but now they expand the scope further, that they basically allow a maximum of 4,000 for recovery, treatment, or intervention expenditure for children that has been certified to be under ASD, ADHD, GDD, or intellectual disability, Down syndrome, or specific learning disabilities. So that's basically an expansion. Now, and the total relief for medical expenses for self-spouse and children has also been increased from the previous of 8,000 to now at 10,000 ringgit. Now, the childcare fees has always been there, so the relief is merely extended up to year of assessment 2024. So if any of you are having children that is now at 4 years old or 5 years old, you will see that this will be something wonderful, because you can send your child to a registered childcare center and then you'll be able to claim tax relief on that. So that will be basically an additional form of tax savings that you could enjoy. Now, we also know that the government has allowed various times of voluntary EPF withdrawal during the COVID-19 pandemics, and ever since that we have heard a lot of news about how the KWSP contributors have depleted their retirement saving. So the government is hoping that through this kind of efforts, they could basically help individuals to recuperate, to increase back the amount of savings they have in KWSP. So one of the tax initiative is to allow these voluntary contributions into EPF to get an additional tax relief that could be up to 3,000. Now, you have to be very clear about this. Now, this 3,000 is not a new relief, it's an existing relief that is meant for your life insurance. So if some of you has already got life insurance and your premium has already reached 3,000 ringgit, that means you have actually exhausted this relief. So any voluntary contributions will not give you any further relief claim. So it's only meant for those that you do not have a life insurance relief to claim, and now you want to claim an additional relief, then you could consider making a voluntary contributions into EPF. So remember, it's only the voluntary contribution that will be given this relief. And in the event if you are thinking of your mandatory contribution is already very high, and then it's a good news that now you could get back a 7,000 deduction, no, that's not correct. Okay, so this is only an additional 3,000 for those that they do not use up the relief because they do not have any life insurance to claim. So if you're already having a life insurance to claim and you already use up your 4,000 EPF contributions, basically there's nothing exciting for you over here. Now, that's not so good news. In fact, I think that's a bad news. All right. Now, we used to have this relief for our deposits into the SSPN account, or the NESS deposits in English, for our children. It was a very, it's a very beneficial thing because besides having a fairly good return from the NESS or SSPN deposit, which is at par or even higher than the fixed deposit saving rate, we also get a tax relief that gives us a tax saving. But unfortunately, there was no extension to this relief for SSPN. So that means with effect from 2023 onwards, this relief is no longer there. Just take note of that. Now, the government has basically proposed that with effect from year of assessment 2024, the income tax return for all persons will have to be done electronically. So obviously there's not much of issues for young people, but basically for seniors or for those who are not so IT savvy, this could be a challenge. So what we need to advise the taxpayer is basically you must get some kind of help. It can be very daunting for the first time taxpayer who has been very comfortable with the manual filing to switch into an e-filing. It can be easier said than done. Sometimes for those of us who are very well versed with computers, we'll just say, oh yeah, it's a piece of cake, it's simple. But when those who are not very good with it and they really need to face it, the kind of stress and pressure will be very different. So we usually advise taxpayers to get some kind of help or basically to prepare early. Alright, so don't worry about it, because eventually it has to come. The government is not going to make a U-turn, because this is part of how we're going to transform the systems to make it more digital. But just prepare yourself, it's coming. Okay, now there's also a proposal for those of you who are under the CP 500 installment. Now we know right now when you receive this CP 500 installment notice, you're only allowed to make variation of your installment up to any time before end of June. Alright, so up to 30th June. Now, and the problem is, if you make a variation, for example, if you vary your tax estimate too early, and then later you realize that things start to turn around and then business start to improve, and you believe that your tax has to be so much higher, there could be a penalty because of your underestimation of tax. So this can make sometimes taxpayer feel a bit restless on how they should be doing it. Now the good news is, now the government actually allow another time of variation that will be not later than 31st October. So that's basically good news. Now these are some of those proposals that's relevant for individuals. As you can see, it's not much, but there's something. So the only good news I would say is for the middle income group, you're going to get a tax saving, which is about 2,000 over ringgit if your chargeable income is up to 100,000. Okay, so what about tax proposals that's relevant to corporate and business tax? So now, in terms of corporation tax, that means it's applicable for Sdn Bhd for companies, and even for business tax for some of the sole proprietor, this might be relevant to you. Now there's also a tax rate adjustment for companies, and we call this as MSME. So basically the category has included another group of entities called the micro, small and medium enterprises. Now they will see a reduction in tax rate that previously we know the SME can enjoy 17% for the first 600,000 of chargeable income. But now the good news is they will further bring this down to 15% for the first 150,000. So you will see that will actually effectively bring you a saving of 3,000 ringgit a year, which is a good news. Okay. Now the rest will still be similar with the existing. The next 450,000 will remain at 17%, and anything in excess of that will be taxed at 24%. Now there's some fine-tuning in the Act. Basically is to address some issues with definitions and also consistency. For example, there is a readjustment to the Act in terms of the due date for the withholding tax payment for commission, because there are other withholding taxes which uses 1 month and then they use 30 days, and they are basically realigning. So I don't think that's something very critical for us. But okay, there's a redefinition of the word or the term plant for capital allowances purpose. Now previously the word plant has been defined to exclude any kind of intangible assets, and now they further fine-tune it. Basically they have excluded intangible asset. That means intangible asset may be a plant, alright. Rather what they do is they have introduced a new clause to say that it can be any other asset as prescribed by the ministers to be excluded as definition of plant. So it's just to basically address the fine-tuning of definitions to make the implementation of the act more practical. Alright, so again, nothing much about that. They are now expanding the scope of double deduction. Now this has always been there. Basically it's a double deductions for hiring employees that are under categories like senior citizen, ex-convict, and so on. And what they do now is they basically extend it to include corporate smart internship. That will be hiring residents of Henry Gurney School or registered supervised welfare home. So again, it's a old stuff. It has just been expanded, that the scope is just basically bigger. Now this is going to be a new deduction basically for contributing or donating what we call a smart AI driven reverse vending machine. Now when I first saw this, I was like, what is that? Okay, so basically now because of the tax budget, we have a better awareness. Now this is basically some kind of community machine. You know, when you basically walk around, you saw that kind of collection bin of boxes that you can dump in your trash, your items for recycling. Now the traditional way is they like to paint it with different colors, and they tell you that you're supposed to separate the items yourself, like this is for aluminium, this is paper. But you know, it didn't work very well because generally people just chuck and they throw whatever things inside, whether it's recyclable or not recyclable. So this is basically a machine that there is this AI capabilities that they will be able to identify for you what is the ingredient of this particular refuse, and then when you put it in, they will be smart enough to identify where they will segregate it for you. So they basically want to encourage businesses to contribute so that you could provide more of these kind of reverse vending machines, which will help to make the world or make Malaysia greener. Alright, okay, lease rentals of non-commercial motor vehicle. Now this law has always been there, that the government has restrictions on how much you can claim as a deduction when you lease or when you rent a non-commercial motor vehicle, which is up to 100,000. That's based on the existing law. Now that's actually applicable for those vehicles that they are new and the cost does not exceed 150,000. Now as part of the government's initiative to achieve certain carbon footprint, they want to encourage use of electric vehicles. So this is basically like telling you, if you want to get more deduction, then please consider leasing electric vehicles than the traditional vehicles is running on petrol or fuel. Now, so what happened is now the lease rental of these electric vehicles will be given a deduction up to 300,000. That's actually 3 times more than the present 100,000, or 6 times more than the 50k. So it's actually like a very good deal. So if any of the businesses out there that's considering leasing motor vehicles for their executives or for their board of directors, this is an option that you can consider to really increase your tax deduction. Now the government will be rolling out E-invoice initiative. It has already been in the talks way back last year, and now we can see that the government is trying to put down a roadmap to tell us that when they expect this thing to be implemented. Now we can see that 2023 is just a pilot projects that the government will select some companies to work with them, and slowly they would roll it to businesses that their revenue is much higher. So as you can see, they are aiming at those with revenue 100 million and above in 2024, and then they will further expand the scope to cover those businesses that their revenue is 50 million and above. Now, but what you can see is in 2027, they expect all businesses will have to come under this e-invoicing initiative. Now, well, probably some of you are not aware of what's an e-invoices, but you can read some of the news that I have attached in our web page over here. Now, but what it means for you is, this is like, you know, when the government introduced GST, and there are a lot of small businesses that they are so afraid of the GST implementation because of the computerizations and the digitalization. They rather close down their business and say, you know, that's it's time's up for me. And we're gonna see that now there's another thing that's gonna come back to us, which is this e-invoicing initiative. Now, basically what it means to you is about, it's time to digitalize your business. So if, let's say, your business is still very conventional, you have to start planning and look ahead. So don't wait until when it comes to you and then you be kelam kabut, right? So basically it's about time that you should read up a bit more and start thinking about it, and then you have a couple of years to plan. So this is a good time to start to think about it. You don't have to rush into it first, but you can just observe, but be prepared. All right, it's coming now. So that will be the main thing that will be more relevant to corporations as well as to businesses. Now, of course, there are a lot more incentive proposals which I did not include it over here. And what about stamp duty and RPGT? Now, I'm sure those of you who has engaged in acquiring real property, you will probably be aware of stamp duty, and those of you who has made any transfer of real property or disposed real property, you will probably be aware of RPGT. Now, so let's start with the stamp duty first. Now, there's a good news over here. Now, you see, previously, if let's say a husband is to transfer a house to their wife, now these sort of things can happen for whatever reason. Sometimes when they purchase a property, they do it when they are husband and wife because it's a joint loan. So when they do a joint loan, it's actually like two names. And of course, at the later stage of their life, they may want to restructure the way how they manage their estate. So maybe husband would like to transfer the other half of the property to the wife. So for whatever reasons, okay. The good thing is when husband transfer to wife, vice versa, there will actually be a full stamp duty exemption. So you don't have to pay stamp duty for a gift transfer between husband and wife. Now, but if let's say the transfer is between parents and child, you find that there will only be a 50% remission. Remission means there's a discount. So basically they will compute the stamp duty in full, and then you will see that 50% discount will be given. Now, so that's basically for transferring between parents and child. Now, there's nothing given for a transfer between the grandparents and the grandchild. So you have to be assessed and pay a stamp duty in full. So the good news in this budget 2023 proposal is such that for the transfer between parents and child, which was previously only 50%, and grandparents and grandchild, which they get nothing, right? So now they will extend a 100% exemption on the stamp duty for the value of the property up to the first million. So the first million, if let's say you're transferring a house from your grandfather to the grandson, and let's say the property value is only about 800,000, so basically you don't have to pay stamp duty. But if let's say the property value exceeds 1 million, whatever excess above 1 million, the stamp duty will still get a 50% remission. So it's a really good thing. So this will allow us to plan ahead the estates, like when do you want to transfer your properties. You could actually plan nicely over here. So it's a good opportunity that you could save your stamp duty. Now for RPGT, now there is this no gain no loss that basically disposer does not need to pay RPGT when they fulfill certain conditions. Again, for example, if there is a gift of property between husband and wife, parents and child, or grandparent and grandchild, you don't have to pay RPGT. All right. Now, what we see here is the government is now recognizing the transfer between former spouses. So if the actually meant for cases like divorce or dissolution of marriage under the court order. So if let's say the court has put an order that the man will have to transfer the property back to the woman, now this will also be a no gain no loss disposal, so that there will be no RPGT payable by the transferor. So that's another thing. Now there's actually another no gain no loss transaction where it used to apply to those individuals that transfer a real property into a company controlled by them in exchange of substantial shares. Now this is usually like, for example, if let's say I want to start a company and I need to have a company with certain amount of paid up capital. So let's say for licensing requirement, let's say we need to have a company with a paid up capital with at least 2 million, but I don't really have a 2 million cash to start that company. So one way they could consider is to transfer in their real property so that it will help to boost the amount of their paid up capital. Now those days when this kind of transfer takes place, there's actually a no gain no loss transaction. Now it is still a no gain no loss transaction, but what they're trying to do is they're trying to reduce the scope, that this will not be a no gain no loss transaction if let's say the company that you're transferring the property into is not a company incorporated in Malaysia. So if they incorporate outside Malaysia, then it will not apply. Now, so these are a very short sharing, less than half an hour, telling you about what are the key changes in budget 2023 that are more applicable for, you know, individuals, general societies and small businesses. So I hope you find that this video is helpful to you. Give us a thumbs up, like us, subscribe to our channel, or if you think that you need more detailed advice or you need more specific assistance, we welcome you to contact us. Thank you very much.